It's not every day we wake up to the financial equivalent of an earthquake. But that's kind of what happened when Japan
Yeah.
decided to shake things up with the yen. We're talking a 12% drop in the Nikkei site, seemingly overnight,
Yeah.
and the aftershocks are rippling across the globe.
Right.
So we've got expert speaker here with us to help unpack what Japan did, why they did it,
Okay.
and what it all means, especially for you.
It's a fascinating situation, and it all really boils down to this delicate balancing act Japan has been trying to pull off for years. On one hand, they need some inflation to help tackle their massive public debt.
Right.
But on the other, they can't let it get out of control,
Yeah.
especially with those sky-high energy input costs.
So when we say Japan needs inflation,
Yeah.
that might sound a little counterintuitive.
Right.
Isn't inflation usually a bad thing?
Generally speaking, yes. High inflation can be problematic, but for Japan, which has been grappling with deflation for decades,
Right.
a little bit of inflation can actually be beneficial. You see, with deflation, prices fall, which discourages spending because people hold off on purchases expecting prices to drop even further.
Right.
This can lead to a vicious cycle of economic stagnation.
And I'm guessing that with all that debt, Japan doesn't exactly want a stagnant economy.
Exactly.
Yeah.
A bit of inflation can stimulate economic activity and, importantly for Japan,
Yeah.
it can help to gradually erode the value of their debt.
So they're choosing to slowly devalue their debt instead of risking a messy default.
Essentially, they're trying to inflate their way out of trouble.
Smart move, maybe?
Mm-hmm.
But who ends up paying the price for that strategy?
Well, in the short term, anyone holding a large amounts of yen or Japanese bonds,
Okay.
the value of their holdings decreases as the yen weakens.
And what about the average person on the street in Japan?
Yeah.
How are they feeling the impact?
Interestingly, Japanese citizens haven't been as hard hit as you might think.
Okay.
Compared to other developed countries, wealth is distributed more evenly in Japan, so the pain of a weakening yen isn't as concentrated.
Right.
But they are certainly feeling the pinch through more expensive imports, particularly energy and food. That's part of what prompted Japan to step in.
Okay.
They were facing growing public anger over reduced purchasing power.
So how did Japan finally decide to, as we said, shake things up? I mean, what specifically triggered this?
Well, they intervened by raising interest rates.
Right, but it was a surprisingly small hike, wasn't it?
Yeah.
Just 0.1 to 0.25%. How can something that small create such a big reaction in the markets?
That's a great question, and it highlights just how interconnected and sensitive global financial systems are.
Yeah.
You see, for years, investors have been taking advantage of Japan's low interest rates through something called the carry trade.
Okay, let's unpack that a bit.
Sure.
What exactly is the carry trade, and how does it work?
Imagine you're an investor, and you see that interest rates in Japan are near zero, while in the U.S., for example. Right.
They're significantly higher.
Okay.
You could borrow a large sum of yen at that super low rate in Japan and then invest it in higher yielding assets like U.S. bonds or stocks.
So you're essentially profiting from the difference in interest rates.
Right.
Borrow low, invest high.
Exactly.
Sounds pretty lucrative.
It was for a long time.
Yeah.
But this strategy, like any investment, comes with risks. And one of those risks is that the interest rate differential could change.
Right.
If Japanese interest rates rise.
Right.
The cost of borrowing those yen increases.
Yeah.
And the profitability of the trade evaporates.
Ah, I see where you're going with this.
Right.
Japan's small rate hike, even though it seems insignificant on its own, was enough to spook those investors who were heavily leveraged in the carry trade.
Exactly. It wasn't so much the size of the huck itself, but the signal it sent. Japan was putting its foot down, signaling that it was willing to defend the yen and potentially raise rates further.
Okay. That was enough to trigger a wave of selling.
Yeah.
As investors scrambled to unwind their carry trade positions, which put further downward pressure on the yen.
That explains why the Nikkei plunged so dramatically. It was basically a mass exodus of foreign investors pulling their money out of Japan.
Precisely. The carry trade had become so popular that trillions of dollars were flowing through it.
Wow.
So even a small shift in sentiment can cause significant market turbulence.
Okay, so we've got Japan needing inflation to deal with its debt.
Right.
Global investors profiting from low Japanese interest rates through the carry trade, and then Japan finally tapping the brakes, even slightly, and sending shockwaves through the markets.
Got it.
But here's where things get even more interesting.
Oh, I love when you say that.
Well, despite the initial shock,
Yeah.
the markets bounced back remarkably quickly. What does that tell us about the underlying health of the global financial system?
And what about the bigger picture of how global capital flows are driven by these interest rate differentials?
Right.
We'll dive into all of that right after this.
Okay, so you were about to tell us why the market's quick bounce back after that initial shock is so interesting.
Well, it suggests that this wasn't a systemic crisis,
Okay.
but more of a mechanical adjustment in the market.
Right.
You see, Japanese stocks are still considered reasonably valued by many analysts.
Yeah.
So for investors who weren't over-leveraged in the carry trade,
Right.
the sudden dip presented a buying opportunity.
So basically a fire sale.
Exactly.
To those who were prepared
Right.
and had cash on hand.
Yeah.
But you mentioned this all connects to a bigger picture of global capital flows.
Absolutely.
Yeah.
Think of global capital like water,
Mhm.
constantly seeking the path of least resistance and highest return.
Right.
For years, that path has led to the U.S.,
Okay.
largely due to the strength of the U.S. dollar and relatively higher interest rates compared to places like Japan. It's almost like global capital has been crammed into U.S. markets, particularly equities.
This monetary premium you talked about before,
Yeah.
where the U.S. benefits simply from having the world's reserve currency.
Exactly. It allows the U.S. to run persistent trade deficits because other countries need dollars to transact in global markets.
Right.
They're essentially financing our consumption by buying our debt.
Yeah.
But here's the thing.
Okay.
This dynamic isn't necessarily permanent.
Right.
What happens if the U.S. economy weakens and the Fed starts cutting rates?
I'm guessing that flow of capital into the U.S. could reverse.
That's the million-dollar question.
Yeah.
If the U.S. dollar loses its luster,
Okay.
we could see a significant rotation of capital out of U.S. markets and into other regions with better growth prospects or higher interest rates.
So think of it like a relay race, passing the economic baton from one country to the next.
That's a good way to put it.
You've talked before about how Japan had its moment in the 80s, the U.S. in the 90s, and China in the 2010s. Is this just the natural ebb and flow of the global economy?
It's a pattern we've seen repeatedly throughout history.
Yeah.
And this time, emerging markets could be the beneficiaries as capital flows out of developed economies seeking higher returns.
Right.
But this kind of rebalancing,
Yeah.
while necessary in the long run, can be bumpy.
Yeah.
It can create volatility and uncertainty in the short term.
So is this capital rotation a good thing overall? A necessary rebalancing, as you said?
Rebalancing is definitely necessary, but timing is everything.
Right.
We actually missed an opportunity for a smoother transition back in 2019 before COVID hit.
Oh, why?
Back then, the U.S. economy was strong, the Fed was starting to raise rates, and emerging markets were looking attractive.
Yeah.
It could have been a more gradual, less disruptive shift.
So what you're saying is that waiting until things are already shaky,
Right.
like they are now with all this global uncertainty, might make this transition a lot messier.
Unfortunately, yes.
Yeah.
And the consequences could be significant, particularly for U.S. consumers who have grown accustomed to cheap imports and low interest rates.
Right.
If this capital rotation happens too quickly, we could see inflation spike, interest rates climb, and the dollar weaken, all of which could put a strain on household budgets.
So this seemingly small event in Japan, this interest rate hike that barely made headlines, could actually be a harbinger of some pretty big changes on the horizon.
It's certainly possible,
Yeah.
and it underscores the interconnectedness of the global economy.
Right.
What happens in one corner of the world can have ripple effects that are felt far and wide.
For sure.
And let's not forget, we have a lot of other potential global threats on the table right now.
Right. Like what else has you feeling jittery?
Well, we've still got those sky-high debt levels in the U.S. and Europe. Our persistent trade deficit, political polarization on both sides of the Atlantic, the war in Eastern Europe, and of course, ongoing energy insecurity.
Right.
It's a complex and concerning picture, to say the least.
Our source material also highlights the rising social unrest in the UK. Do you think that's connected to these economic pressures?
Yeah.
This feeling that the pie isn't growing as much anymore?
Yeah.
So everyone's fighting over smaller slices?
Absolutely.
Yeah.
We've seen this pattern play out time and time again throughout history. Remember the protests in Chile a few years back?
Yeah.
They were sparked by a tiny increase in train fares.
Wow.
But the underlying cause was a deep-seated economic anxiety.
Right.
When people feel like they're falling behind.
Yeah.
When the cost of living keeps rising while wages stagnate, they become less tolerant, more susceptible to division,
Right.
and more likely to look for scapegoats.
It's almost like a pressure cooker, isn't it?
That's a great analogy.
The heat keeps building.
Yeah.
And eventually, something's got to give it.
Unfortunately, in today's world, with social media amplifying grievances and political polarization running rampant,
Right.
it seems like that pressure cooker is reaching a boiling point in many parts of the world.
And our source material is pretty blunt in its assessment of what's driving all of this broken money, broken energy policy.
I'd add broken media and broken politics to that list as well.
Yeah, that makes sense.
It seems like many of our institutions are failing to adapt to the realities of the 21st century. They've become too centralized, too bureaucratic, too out of touch with the needs and concerns of everyday people.
Yeah.
They're no longer serving the people they were designed to serve.
So if these systems are failing, what are the alternatives?
Yeah.
Our source material briefly touches on Bitcoin as potential lifeboat in this turbulent financial sea.
Yeah.
What are your thoughts on that?
Bitcoin is certainly a fascinating case study.
Mm-hmm.
It represents a radical departure from the traditional centralized financial system. It's decentralized, borderless, resistant to censorship, and its supply is fixed.
Right.
It's a digital asset that embodies many of the qualities that people are looking for in a world where trust in institutions is eroding.
But Bitcoin is also incredibly volatile, right? And it faces regulatory hurdles in many countries. Is it really a viable alternative for the average person?
Those are valid concerns.
Yeah.
Bitcoin is still a relatively young technology, and it's definitely not without its challenges.
Right.
But it has shown remarkable resilience over the years, and its core principles of decentralization, transparency, and scarcity are resonating with a growing number of people, particularly those who are skeptical of the existing financial system.
So are you saying that Bitcoin could actually play a role in creating a more resilient?
It's certainly a possibility worth exploring. As our traditional systems continue to falter, people will naturally seek out alternatives. And Bitcoin, with its unique properties, could be a compelling option for many. Of course, it's not a silver bullet. No single solution can address all of the complex challenges we face.
Right.
But it's an important part of the conversation, a potential piece of the puzzle as we try to build a better, more sustainable future.
Okay, so we've covered a lot of ground here, from Japan's surprising financial move to the potential for global capital shifts and the role of alternative solutions like Bitcoin. And honestly, I'm feeling both inspired and a bit overwhelmed by it all. Is there any one thing that really stands out to you from all of this?
I think what's most striking is the interconnectedness of it all. How a seemingly small decision in Japan can trigger a cascade of events that reverberate across the globe. And how these economic forces are intertwined with social and political trends, creating a complex web of challenges and opportunities that we all have to navigate.
We'll continue to untangle that web after a quick break. It really is mind-blowing when you think about it that way. A decision in one country can set off a chain reaction across the globe. Impacting everything from markets to social stability.
It really is.
But you said something earlier that caught my attention. You said this time of uncertainty is also a time of immense opportunity.
Right.
What do you mean by that?
Well, when the old systems start to break down, it creates space for new ideas and new solutions to emerge. We're seeing this in the financial world with the rise of cryptocurrencies, decentralized finance, and alternative investment models. We're seeing it in the energy sector with the growth of renewables and the push for energy independence. We're even seeing it in media and politics with the emergence of citizen journalism and new forms of political organizing. It's a time of experimentation, innovation, and frankly, a bit of chaos, but that's often where the most interesting breakthroughs happen.
So instead of fearing this uncertainty, maybe we should embrace it as a chance to rethink the way things work and build something better.
I think that's a great way to look at it.
But with so much information out there, so much noise and conflicting viewpoints, it can be hard to know where to even begin. What advice would you give to our listener who wants to navigate this complex landscape and maybe even be a part of shaping a better future?
The most important thing is to cultivate a mindset of curiosity and critical thinking. Don't just accept things at face value.
Yeah.
Ask questions, challenge assumptions, and seek out diverse perspectives.
Okay.
Dive deep into the topics that fascinate you. Learn about new technologies like Bitcoin and blockchain, and consider how they might fit into a more resilient, equitable, and sustainable future.
Okay.
Engage in thoughtful dialogue with others, even those who hold different views.
Right.
We don't have all the answers, and the best solutions will likely emerge from a process of collaboration and open-mindedness.
That's great advice.
Yeah.
It reminds me of something you said earlier about education being key. The more we understand about these systems, the better equipped we are to make informed decisions and potentially even drive positive change.
Knowledge is power. And in today's rapidly changing world, continuous learning is essential.
Yeah.
We need to be proactive in seeking out information, evaluating its credibility, and connecting the dots to see the bigger picture.
Right.
But it's not just about absorbing information.
Okay.
It's about applying that knowledge, engaging with the world around us, and becoming active participants in shaping our future.
So for our listener who's been with us on this deep dive, from Japan's bold move to the intricacies of global finance and the potential of alternative solutions, what's the one key takeaway you hope they'll walk away with?
I hope they come away with a sense of empowerment. The future isn't predetermined. It's being shaped right now by the choices we make, both individually and collectively. By understanding the forces at play, by cultivating critical thinking skills, and by engaging with the world around us, we can each play a role in creating a more just, sustainable, and prosperous future.
That's a powerful message to end on, a reminder that we're not just passive bystanders in this global drama.
Right.
We have agency, we have a voice, and we have the power to make a difference.
We do.
So to our listener, thank you for joining us on this deep dive. We hope it sparked your curiosity, expanded your understanding, and maybe even inspired you to take action.
Right.
Remember, the journey of learning is never truly over. Keep diving deep, keep asking questions.
Absolutely.
And keep exploring the possibilities. Until next time.
Thanks for having me.